There is more to me, Queen Eliara of Elfgard, than my elven magic. Just as there's more to Geico than saving you money, Geico also gives you 24/7 access to licensed agents online, on the phone, or on the Geico app. And while I am a mighty elf queen, I am also a mighty big fan of barbecue potato chips. Minions! More smoky mesquite.
Geico. Expect great savings and a whole lot more.
Our next update at 6:30. Just ahead, more stimulating talk from the O'Charlie's Digital Studios. $9.99 menu, 9 great meals, 1 great price. O'Charlie's.
This news brought to you by the Honda store in Boardman, Eastern Ohio's #1 volume Honda dealership.
You could be driving a Honda.
You could be driving a Honda today at the Honda store in Boardman, Eastern Ohio's #1 volume Honda dealership. Honda means economy and performance, and the Honda store has a great selection of brand new Hondas, plus the best certified pre-owned cars. Come in for the latest in financing, lease, and down payment options at the Honda store, Route 224 in Boardman, or go online to honda-store.com.
This report is brought to you by Staples.
Staples has low prices on everything your kids need to head back to school with confidence for less. Right now, 5-star 1-subject notebooks, Elmer 6+ 2-packs of glue sticks, and 4 packs of 3x3 yellow Post-it notes are just $2.50. While supplies last, ends 8/5, limit 5, and store only. Staples, it's pro time.
Here's an addition to our family of fine restaurants, Vasilio's Family Restaurant, next to Walgreens, Cortland. For your home or business, call Massa Heating and Girard, your factory-authorized Bryant dealer. Now, the Storm Team 27 forecast.
Mostly clear skies this evening and tonight. Temperatures sliding into the low 60s. Partly sunny, warmer for your Tuesday. Afternoon highs building through the middle 80s. Very small risk of an isolated shower or thunderstorm into the afternoon and evening. With your Storm Team 27 forecast, I'm meteorologist Paul.
Currently 83.
The following is a paid program and does not necessarily represent the views of iHeartMedia.
Securities and advisory services offered through Investacorp, member FINRA SIPC. Information provided during the J. Arnold Wealth Management Company show is intended for informational purposes only and should not be considered advice. Please consult with your own investment advisor or tax advisor before making any investment decisions. This is the J. Arnold Wealth Management Show.
We got it.
Well, crank it a little, man. You got it up there.
Come on now. Got some Stones, one of my favorite songs.
Rolling Stones.
Yeah.
Can't you hear me knocking?
Absolutely.
You know who's knocking now? It's J. Arnold.
Hey, good intro. What's up? We on?
We are on right now.
All right, thanks. That's Steve, right? Steve. Thanks, Stevie.
That's
Appreciate
Steve.
that, man.
Yeah.
Appreciate that. I feel important now. I requested some Stones to come into. Cool.
All right. We try to make you happy, but welcome. It's the first time we've been in the studio together for quite some time.
It's been
John.
a couple of years, man. It's good to have you, man. I'm really excited to see you.
Well, it's good to see you. And, here we're going to focus on estate planning today.
We are. But first things first, I want to tell you I listened to your show on Sunday. You're very talented. Thank you for being on.
Oh, well, thank you.
I really enjoy it. And to disclose to the audience that Mo Ray is a family friend of ours and a personal friend of mine, and so I'm a little bit biased, but good job, man.
All right, well, thank you very much, sir. Seriously, it means a lot coming from you.
You're welcome.
Get a little closer to that mic. It won't bite you.
All right. It won't? All
yeah,
right.
that sounds good. That sounds good. Right. Well, and we were just talking before the break. The stock market's been a heck of a ride. A caller brought up earlier how how I'm sure your 401k is doing well and all that. Yes, all that is true, but are we? What goes up must come down.
Yeah, I'm genuinely scared. That's the truth. So a lot of my competition, they come on and they'll do a talk show or they'll do an advertisement, and it's fear mongering, meaning that get out of the stock market, buy this fixed this annuity or this or that. You better get the hell out because hell's gonna break. I don't buy into that. I don't do that. So when I say I'm fearful, it's legit. There's no secondary motive behind it. This thing has not laid out enough steam yet we're on track to do 22-25% year right now if things keep rolling, and that's double than average. And hey, listen, since 1929, the market's average 8 to 10%.
Right.
If it's on track to do 25, something's going to break.
Right.
So
What do you blame it on? Is it just excitement over a new president?
No,
Is it?
No. That's the thing, and you'll appreciate this because I know you're on the opposite team, and I like the fact that you bat for the opposite team because I love to hear the other side, and you really rationalize it well. You know, when Barack Obama, President Obama, came in 2009, you know, actually 2008, the second year in his term, the market bottomed out, and it went, and it's been spectacular since.
Right.
Now, does all that credit go to President Obama?
Certainly not.
Absolutely not.
But, you know, if it all went bad, it would. But you know how that...
Well, I mean, not from here.
No, but that's politics. I'm saying politics aside.
That is politics, but when you invest, that's the whole reason for I brought this topic. When you invest, I need you as an investor to be objective. Take all your personal baggage, so to speak, including mine. I have it. I bat the opposite team against you, as you know, but I'm more rational, I think, than a lot of ours. Bottom line is the President of the United States has no direct effect, direct being the key word, on the stock market. No, there's no one president in history who's pressed the button on the stock market and made it go up, or just the opposite has made it go down. And a guy that I was for, President Bush, the son, Junior.
Well, we share that vote. I voted for him the first time.
Did you?
Yes,
excellent,
I did.
Excellent. You know, he was not responsible for the mortgage crisis that caused 2008. Different from what a lot of people think, or that Bush did me wrong or not. But Bush had nothing to do with that. Bush was busy being president of the United States. Okay, so the mortgage crisis was caused by lack of underwriting and greedy people that wanted to buy homes they couldn't afford. That's the facts. All right, so that has nothing to do with the president of the United States. So how this relates to your initial question is objectively, I do not believe that this is what's called a Trump bump. I think that's foolishness. I don't think that President Obama is due any credit or any negative for stock market negative or positive consequences, because those guys are so busy trying to protect the United States and managing their own budgets and doing all the things that are outside of the stock market. There'd be no way they can concentrate. Now, a lot of people say subconsciously or indirectly the President of the United States does affect the stock market. Well, of course it does. So do a lot of other things too. But, last year was a dismal year for the stock market. If you'd have put your money in the beginning of January in the stock market of last year and rode it out to the end of December, you really didn't start making money until the middle of November.
True. But ultimately, though, I did have a pretty good year, though, because as you said, it just took off.
Yeah, at the end of the year. Mm-hmm. And the end of the year that could have been obviously due to some excitement. Greed took over when Trump got out. Could have been. Or just maybe 9 to 10 months in, the Bulls took control after being down for 10 months.
Well, just let me say it, not to interrupt you, but also one thing that seems different this time around is that this market is being carried by a relative small number of stocks, if I'm understanding this right. Not so much blue chips as back in the old days, but we're talking about Amazon, Apple, and companies like that. They seem to be leading.
They're called the FANG stocks.
Okay, they seem to
Facebook, Amazon, Netflix, etc.
And they seem to be leading the charge, whereas the rest of the market overall, we're doing all right, but not the phenomenal growth that these companies have had.
Well, no, I'm saying this without being a jerk. Respectfully, you're wrong. I'll tell you the reason why.
Okay.
The SP 500, the NASDAQ, and the Dow Jones which are made up of. Well, let's talk about the blue chips, the Dow Jones and the SP. Those are doing kick-ass years. That's the truth.
Okay.
But where you're right is now compared to the FANG stocks, Amazon, Facebook, which went up 25 points in the past 2 weeks. Yeah, they're not competing with those, but you're talking about a completely different genre of stocks.
Okay.
You're talking about high beta stocks versus beta, which is S&P 500. So to compare, it would be comparing like my Corvette to say a Camry.
Okay.
The Camry's probably a much better, higher quality car, but on the drag strip, my car's going to kick its butt. Right. So that's the same comparison. So my point is, keep yourself completely objective when you're either managing your money, or if you're my client, or if you're if somebody else's client. Kind of take the news out of it, because the news is late. All right, big money knows the news 2 weeks before you do, and big money controls the stock market. There's no one thing that the president's going to do or not do that's going to control the stock market day to day. keep away from that. The things that the president's implementing today might be negative or positive, maybe 8 to 12 months from now. All right. That's just the way it goes. I think the market goes in cycles to where the bulls take control, the bears take control. Right now, we're in a very bullish environment. If I was to tell people, if I had a gun to my head where to invest, Europe. Get some European indexes. Like the Barron's is the thing that I read the most. That's the most objective reading that I think I read, and then they have great ideas. It's really not politically driven. It's straight ideas. I love it. It's not full of a lot of advertisements where the Wall Street Journal has a lot of, I don't know, a lot of fat in with the meat. You know what I mean?
Yes.
Barron's is a lot of meat. So they talked about 3 months ago, actually the cover says buy Europe. And I did my research on it. I'm a fan. I think Europe's where we were at in 2008, 2009.
You don't believe that the Brexit, that is the England leaving the European Union, will have any effect, a negative effect?
No, that ship has sailed. That was built into it.
Okay.
So it's like when AIG went out of business and GM went out of business and Merrill Lynch, et cetera. When the downs hit, the ship had sailed. Now it's trying to get, now it's find the winners of the pack. And that's where you make your money, is from low to high. So again, you're talking about very serious, aggressive investing. You're talking about the unknown because you're not familiar with stuff over there. But man, spread your risk out, buy some indexed ETFs on the European exchanges. I think you'd be a winner. I'd be very careful of the emerging markets, though, because it's exactly what they are. They're emerging for a reason. They're going from mud huts to Western civilization, and sometimes they just don't cut it in some economies or some quarters, and you can get destroyed. So,
well, let's remember a few years back they were talking about the BRIC stocks. And one of those was Brazil, and Brazil is not exactly
deep depression.
Yes, so that would have been risky money.
Exactly, but there's been 1 year I made about 79% on a BRIC ETF. Believe it or not,
wow,
just hit it right,
nice.
And in that next year, it just completely got destroyed. It's just the way it goes. So it's just whatever your cup of tea is as far as investing wise, you just have to be careful. But I want to make August, like at the beginning of the program, you talked about, what we're going to, which is estate planning. I want to make August, the general wealth management. I want that to be the estate planning. I want the topic to be pure estate planning. So Ron and I have been talking for the past couple of Mondays about this great product that came out that I'm a fan of. And from previous years, I think the show's been running now since 2009. From previous years, very rarely do you hear me talk about product, because I was trying to stay away from being a product salesman. Buy the greatest annuity, buy the greatest life insurance policy. My guys, my products are the best. I hate all that crap. This show is truly an education, instructional show, and combine that with my personality, we brought some clients over. But the goal here is not to sell you a product. So with that said, I have a product that I think is very appealing to most, and it's not an annuity, or it's not even based to any investment product, and that's a long-term care product. So for decades, I would say, let's say for a couple decades, there was this new vehicle that came out, long-term care insurance. The problem with long-term care insurance is the premium can raise year to year if the insurance company feels like it. Most insurance companies have got rid of it because it's breaking the bank. You have to use the insurance company's doctors to evaluate what's called your ADLs. And more importantly, the client might not use it, and they've died pouring thousands of dollars into this insurance company and get nothing back. Well, various companies have gone to this particular vehicle, but there's no company that I think gives you as strong as a product in this product that I'm offering through Pacific Life, which is called Live, Die, Quit. So this product is to where if you die with the insurance policy and it is not paid out to a long-term care facility, your beneficiaries get everything you put in plus a 4 to 5% increase on that money you put in, fixed income. Let's say, for simple terms, you put in $500,000.
Okay.
All right. You die. I get to hand over your kids $500,000 plus an additional $25,000 in interest. So there's no risk to dying with the policy, right?
All right.
Or it used to be a risk to dying and you're out the money. Okay. Let's say you change your mind. Let's say you're 75 and you and your wife say, hey, roll the dice. I don't think, in my opinion, that I'm going to go into a long-term facility. I'm feeling pretty lively. I've been taking good care of myself. And we paid in $500,000 over the past 20 years to this life for this long-term care. You know what, John? I just want my money back. Okay. Here's a check for $500,000. Have a nice day. No questions asked. But that's pretty cool, isn't it?
It's very cool.
That is cool. And that's why I'm a big fan of this, because before, I couldn't look my clients in the eye and say, I'm selling you something that I believe in. Because only 1 out of 2 people use it. 2, the insurance company has all the control as far as medically evaluating you. And 3, I can't guarantee that your premiums are not going to increase absurdly, and they have. So I didn't want to have that vehicle. I didn't want to have that vehicle in my fingertips, and I wanted the insurance guys to kind of take that. In just in case it fell, I didn't have to take the blame. And not only did I lose the insurance business, now I lost the investment business because clients were pissed off. So, and then obviously the great part is if you put $500,000 in, this insurance company will give you 4 to 7 times the amount of what you put in as far as long-term care benefits. So let's say you put in $500,000 over the course of 20 years. I'm just using a rough number. We can give you, $2 to $2.5 million worth of long-term care coverage. So now your estate doesn't get attacked from a Medicaid spend down. Are you familiar with a Medicaid spend down?
I think you might want to refresh some of the listeners with that term.
So Medicaid spend down is this, and I'm not an attorney, so feel free to check me, any listeners or any attorneys out there. Feel free to check me for here's what I know from client experience, all right? You have to liquidate all your assets down to basically $1,000 in assets before Medicaid will pay to house you in a medical facility. So I've been seeing my clients, my baby boomer clients who are taking care of their senior, their dad and mom,
right,
liquidate their savings, their IRAs, their Roths, their annuities, their house, their furniture in their house, their vehicles, anything worth of value that was supposed to go to them as the kids. All right, your mom and dad worked all these years, they hand you and your brother and sister something. Now it's gone to a nursing home. It's no fault of the nursing home. They got to pay the bills.
Right.
But Medicaid won't kick in and pay that bill unless you've liquidated your own estate down. So how do you get around that? There's just a couple ways to go. One, you go broke purposely.
Not recommended.
Not recommended. You buy long-term care insurance, which was, prior to this vehicle, really unaffordable and scary because you could be throwing your money away. Or you hide all your money in an irrevocable trust. The problem with the irrevocable trust is maybe the state can't get to the money, but neither can you because it's irrevocable. So it's as ironclad. I mean, it's a dangerous vehicle to put your money in that way. So this solves that problem for our clients, and it's affordable. So it's one of those things to where if you want to put in $2,500 a year, okay, then that's what we're putting in. You want to put in $5,000, you want to put a one lump sum, $50,000, okay, that's what we're putting in. The main thing I get to do now sitting across the desk is look at a client and I say, hey, listen, I'm able to give you 100% of the money you're putting in back no matter what, to either your kids or to you at any one time.
Well, they say if it sounds too good to be true,
it is.
This sounds amazing.
I'm glad to hear you say that because I think I'm biased.
Okay.
You think so, Joe? Joe Daniels in the house today, just so you know.
Yes, who does the Youngstown Computer Show on Saturday. You're still doing that,
awesome
right?
Show.
All right, but he's here for different reasons today.
Yes,
but it's great to have you both in the studio.
Thank you.
But having said that, okay, sounds like a very good product and all that.
So what are you hearing? Well, break it down for me. What are you hearing from what I'm saying? Is this as good as I think it is?
It sounds as good as it gets, but that was my next question. I mean, when you're talking about such a vehicle, when you're dealing with certain stocks and that kind of thing, you know it's risk and reward. Sounds like the risk is greatly reduced here.
There's no risk.
Yeah.
That's why I'm talking so plain Janely about it on the radio. Mm-hmm. You'll notice that I never recommend stocks on this.
Right.
One, that's illegal because I don't know listenership suitability. But plus, what if I'm wrong? I'm going to look like an idiot. The risk reward, I don't know who's willing to take that. This particular plan, no risk. None, zero zilch.
Now, once again, for somebody just tuned in, what is this called again?
It's a live, die, quit policy. Okay, meaning that it's a long term. First of all, it's a long term care vehicle.
Okay,
it's an estate planning tool, which is used to protect your estate from having to go through a Medicaid spend down.
Okay,
it's also an all in one. It's a savings account, has a terrible yield on it, but it's still a savings account, and it's a life insurance policy on with obviously the leader of the pack of the three-pronged horse here being long-term care. But it's a way that I can get a client's money back to them no matter what.
Well, another thing you mentioned, you said with some of these long-term care situations, you have to use the insurance company's doctors. Do you have such a restriction with this?
No, but that's why. First of all, I'm licensed with every insurance company in the country that I know of. I'm hundreds. I know Lincoln offers the same kind of benefit. I want to say Mass Mutual offers the same kind of policy. Basically, when somebody does something, the big guys, they all jump on the bandwagon. Nationwide does the same thing, and they have their own they kind of carve it up to fit their own balance sheet. Why I use Pacific Life, even though I can use all the other guys? Pacific Life is mutually owned, okay? Do you know what that means?
I was ready to ask.
All right, so mutually owned, that's if that's the strongest thing you can buy as far as an investment company. When something is mutually owned, they don't have stockholders. When you have stockholders, guess who you report to?
The stockholders.
The stockholders. So you do everything you can in your power to get the dividend, or you do everything you can to get the earnings per share up, right? Or maintain. And you do whatever you got to do that. In some cases, hurting your own products that you're selling just to make the margins. When you have a mutually owned company, guess who owns the insurance the insurance company?
The company?
Nope. The policy owners.
Wow.
Yes, sir.
Okay.
That's so.
They certainly got a vested interest there.
So there's like 3 or 4 giants on the planet when it comes to life insurance. New York Life, Northwestern Mutual, Pacific Life, and I want to say Guardian's a mutually owned company. Everybody else is stock owned, including Prudential, including MetLife, who used to be giants. Well, New York Life and Northwestern Mutual can they do whatever they want as far as what's best for the company. No one's telling them what to do. Same thing with Pacific Life. So Pacific Life helped start Stanford University, 200-year-old company. If you watch football or basketball college-wise, they're the big whale that falls into the water on the commercial about every 3 minutes.
Right.
You know what I mean? It's really shoved down your throat.
I used to have some dealings with them.
It's an excellent company, very conservative company. So I know the check's going to be there. I know they're going to do what they say they're going to do. And they're going to maintain the conservative aura of the companies, and that's important to me because if let's say a company gets in trouble, they're going to go reckless abandon and offer something that's probably going to make the company insolvent down the road, right?
Yes,
that scares it like Enron did. So Pacific Life doesn't have that leverage over them. So now if a client wants, let's say AUL or Lincoln or wherever, I'll go with them. We'll go through them, but best on the block right now, Pacific Life. No questions asked.
That sounds good. I just want to remind you this is an abbreviated program today because at 6:37 we go. That's right, Indians pregame. But you're having some seminars regarding this very matter.
Right. Good. You brought that up because we are running out of time. Now let me tell you about. First of all, I like to call them workshops. Do you know why?
I'll let you tell me. I'm not going to even try to be smart here.
When I hear the investment guy on the radio talk about the latest, greatest seminar, you know what I think of?
You're going to sit there and listen to them sell you something?
Yeah, they're going to sell you the annuity pitch, 7-8% commissions. You're going to get this $15 dinner, and the guy's going to call you a couple thousand times until you hang up on him or tell him to go pound salt, right?
Okay.
That's not what we do here. Am I right, Joe? That's right.
And by the way, I've even attended one of your seminars.
That's right, you did.
And right, no pressure whatsoever, and it was a very interesting.
Right?
Yes.
So that's why we call them workshops.
Okay.
So we engage with the client, or the potential client, the prospects. We serve them heavy hors d'oeuvres, so we don't bog them down with having to sit through a damn meal and this and that. And then we serve heavy desserts after, wine, beer. And soft drinks are free. So you enjoy yourself when you're there.
Yes.
Whether you hate the way I look or the way I talk, you're going to come and get some good eats regardless.
I enjoyed those lamb lollipops.
Yeah. Yes. Those are pretty tasty. Good reminder. And we just get down to it. So when we come back, I'm going to talk about the dates that we're having those, how to get a hold of us to reserve your seat. We're already getting phone calls on it because we've been running some ads on the radio and other places. And then I'm going to give you our phone number out, how to get a hold of me if you want a free consultation.
All right, let's do that. On the other side of this, we'll have a few minutes to say goodbye, speaking to John Arnold about your estate planning options.
Yeah, thank you very much, Bill.
Back after this.
This is the Ron Verb Show on News Radio 570 WKBN.
It's 6:30.
This is a Bloomberg Market Minute. Another record day for the Dow, which traded within 100 points of the 22,000 mark, but fell a little short of that by the closing bell. Still, the 61-point gain to 21,891 was a record. The Nasdaq and S&P both fell. The Nasdaq down 26.5, the S&P falling 2. Biotech stocks held back the Nasdaq. It lost almost 0.5%. Frank Nargentino of North Shore Wealth Management says this was a day in which investors were lining things up in anticipation of some big earnings reports this week.
That's where the focus all seems to be right now. And once the market, as I said, once the market becomes fixated on something, it tends to stay there.
Despite the day's results, the stock averages closed the month of July with strong gains, ranging from 2 to almost 3.5% in July. Spoiler alert, HBO says hackers have stolen upcoming programming. Reuters says there's a report the theft included a script for an unaired episode of Game of Thrones. I'm Joan Doniger, Bloomberg Radio.
Fox News Radio, I'm Lisa Lucero. After a profanity-laced tirade aimed at former Chief of Staff Reince Priebus and other White House staffers, Communications Director Anthony Scaramucci leaves his position at the request of new Chief of Staff John Kelly.
I think I've been pretty clear that the president felt it was inappropriate. Both Anthony and General Kelly also, I think, came to a mutual agreement, and we're moving forward to focus on the jobs outside of this building, not within it.
White House spokeswoman Sarah Huckabee Sanders, it's not clear who will replace Scaramucci.
By sanctioning Maduro, the United States makes clear our opposition to the policies of his regime and the support for the people of Venezuela.
Treasury Secretary Steve Mnuchin as the U.S. imposes financial sanctions against Venezuelan President Nicolas Maduro after he held an election to rewrite the country's constitution. Fox News, we report, you decide.
Our next update at 7. Just ahead, more stimulating talk from the O'Charley's Digital Studios. $9.99 menu, 9 great meals, 1 great price. O'Charley's.
Need a furnace and AC checkup? Call Massa Heating in Girard, your factory-authorized Bryant dealer. Now, the Storm Team 27 forecast.
Mostly clear skies this evening and tonight. Temperatures sliding into the low 60s. Partly sunny, warmer for your Tuesday. Afternoon highs building through the middle 80s. Very small risk of an isolated shower or thunderstorm into the afternoon and evening. With your Storm Team 27 forecast, I'm meteorologist Paul Wetzel.
Current temp 81.
For news on demand, go to 570WKBN.com. Brought to you by Donnell Ford.
Securities and advisory services offered through Investacorp, member FINRA SIPC. Information provided during the J. Arnold Wealth Management Company show is intended for informational purposes only and should not be considered advice. Please consult with your own investment advisor or tax advisor before making any investment decisions. Now back to the J. Arnold Wealth Management Show.
And back we are, and I'm joined, of course, I'm with John Arnold. He's telling you about some estate planning options. He usually doesn't discuss product, but he did today. And there are some upcoming workshops that our listeners might like to know about.
Let me tell you how you can get a hold of us to schedule your seat there, okay? And they're filling up fast. That's not sales talk. They are. We've only had it been on the radio a day now, and we already I think sold 6 seats for the first one. So it's 330-965-9890. Again, 330-965-9890. We're only allowing 30 per workshop. Mo, do you have the dates on those? I want to say they're August 11th.
Actually, I do have the dates. That's going to be August 9th and 10th.
10th, yep.
August 16th and 17th. And August 23rd and 24th.
And we're strategically, so the restaurants haven't been picked yet, because I want to see where the people sign up strategically, geographically, and we'll cater the restaurant to where that's going to be.
And by the way, those are Wednesdays and Thursdays.
Wednesdays and Thursdays.
Would you mind I repeat those dates again?
Yeah, please do. 5:30 to 7, go ahead.
Okay, and that's August 9th, 10th, August 16th, 17th, and August 23rd, 24th. And as I said, I can vouch for this. I've been to one of those seminars. You learn a lot, and you do get some good snacks. So
they are pretty good. For free consultation on your portfolio, you can give us a call at 330-965-9890. You can visit us at www.jawealth.net. And as always, everything's free, no pressure.
All right.
Great show, Mo.
All right. Thank you very much, John. And we've still got about a minute. Anything else you'd like to put out there?
No, I just, I'm real proud of when I do these workshops because a lot of people come out, even if they're not my clients, I'll see them throughout the years and not months. And, hey, listen, thank you so much. You helped my wife and I out so much in making a decision, or it's maybe even I kept their current guy honest. It's always a positive response, whether they become our client or not. And that makes me feel good because that's what it's all about, helping people. And, there's some good guys in our business that are pretty good guys.
Well, I'm glad to hear that. And you're certainly one of them as far as I'm concerned. And just in case somebody's just tuning in, we've been talking about a long-term care vehicle by Pacific Life, in case people would like to look that up. But, of course, the best thing is to give you a call and you can tell them what they need to know or attend one of the seminars. And once more, if you even got time for the phone numbers briefly on the way out the door. Sure.
Give us a call. Again, no pressure. If you want to reserve your seat, 330-965-9890. We're going to talk about strategically how we can put you in a couple vehicles without any money out of your pocket, more than your existing investments, strategically align them to get this long-term care policy in place and protect your estate from a Medicaid spend down.
Right, and that was something. I think our clock is a little fast in here. But anyway, I was going to tell you that is, a lot of people are totally unaware of that. But there you go. It is time to go.
There it is. There's a tribe tune.
It's tribe time, folks. So moving on to Cleveland Indians pregame. They're in Boston tonight, so check that out right here on 570 WKBN. Thank you, John Arnold.
Thank you. Great job.
All right.
Talk to you later.